Fine, so good evening again. We're going to talk about the Indian economy today. I hope the ones among you who had the ZAT today had a good time. I hope you did well in your ZAT paper. But we're going to talk about the Indian economy today. Okay? So let's start. Okay, so when we talk about economy, what exactly is it that we are talking about? So to understand the Indian economy, we first must understand the term economics. Okay? So very briefly, for those of you who are not from commerce backgrounds, economics is a field of study wherein we have resources and uses of resources. So when I say resources, I mean resources like land, like machinery, like buildings, like money, like labor. All of these are called resources when we talk about economics. And these resources have many uses. So economics is the field of study which studies the relationship between resources and their uses. Now, why is this field relevant or why is this field important? This is because the resources that I'm just talking about, these resources are finite. There is a limited amount of land, there is a limited amount of money, there is a limited amount of labor, there is a limited amount of plant and machinery which any corporation or any country has. At the same time, the uses which these resources can be put to are many. So it is the field, economics is the field which studies how scarce resources or finite resources can best be utilized. Okay, so economics is the field which deals with the optimum utilization of scarce resources. Is that clear? Any questions on the definition of economics? Okay, moving on. So when we talk about an economic system or a country's economy, there are primarily three types of economic systems. The first is capitalist, the second is socialist. So when I say capitalist, I mean a capitalist economy. A socialist economy is the second type of economic system. And what is the third? Can anybody tell me what is the third type of economic system? What is the third type of economic system, guys? Rahil, no. No. So when you read the slide, it says mixed economy. That is actually the Indian system, and it is a mixture of capitalism and socialism. But no, it is not the third form of economic system. Actually, a mixed economy is nothing but a mixture of capitalism and socialism. So that is not the third type. The third type, as Yogesh has correctly pointed out, is communism. Now, I would like some of you to try and define capitalism, socialism, and communism for me. So, what is capitalism, please? What is capitalism, guys? Okay, capitalism, Rahil, free markets, no control. Then what is socialism? So what is socialism, guys? Quickly, try and define it, please. Okay, partially correct, partially correct. And then what is communism? What is communism? No, Arvind and Rahil, you are wrong. Communism does not mean everything controlled by the government. That's incorrect. Anybody else? Communism, please. Karthik, yes, equal distribution, but how? So how equal distribution? Okay. So let me explain using a whiteboard the three different types of economic systems. Okay. As I was saying earlier, So when I said economics, I said it is a field of study where we have resources and then you have uses. It is the field of study of relationship between scarce resources and alternate uses. So how to optimally utilize resources, scarce resources, finite resources, this is the field of economics. So when we talk about economic systems, we are talking about three economic systems: capitalism, socialism and communism. And how do we define them? We define them on the basis of two criteria. We talk about ownership of resources and objective of business. So using these two criteria, we will define capitalism, socialism and communism. Okay? In capitalism, the ownership of resources, again to remind you, when I said resources, I meant land, labor, capital, etc. Right? So when I talking about resources, you have to always remember these are resources like land, labor, capital. So in capitalist economy, the ownership of resources is in private entrepreneurs' hands. Okay? And the objective of business is profit maximization. So I tried to define capitalism. I defined capitalism in the basis of ownership and the objective of the business. Okay? So in capitalism, the ownership of resources is in private hands. Private entrepreneurs own land, labor, capital, and the objective of doing business is profit maximization. In socialism, the ownership of resources is with the government. The government of the country owns the resources. So land, labor, capital, factories, buildings are all owned by the government. And the objective of the business is social welfare. Okay? So the objective in socialism is social welfare or equality of citizens. Everybody should be equal. That is the objective of socialism. So before 1991, I'm sure some of you have heard of 1991 reforms, the liberalization, privatization and globalization reforms. Before 1991, India was a socialist economy. You would have heard of companies like MTNL, BSNL, right? All the heavy industries like BHEL, SAIL, Steel Authority of India, etc. These were all, and some of them still are, government-owned entities. The government owned the resources and it ran the business with the objective of social welfare, not profit maximization. Right? Yes, public sector units, Rahil, absolutely. So that is the crux of socialism. Okay? Now communism is slightly different. Communism is slightly different. The objective in communism is again social welfare. The objective is again equality of all citizens. So the objective of socialism and communism is the same. However, in communism, the ownership of resources is with all citizens equally. Okay? Let me explain how this works. So let us say there is a factory running in Chandigarh. In capitalism, a private entrepreneur would own the factory. In socialism, the government would own the factory. In communism, all the workers in the factory would own the factory equally. Okay? So in communism, all the workers of the factory would own the factory equally, and this is done by the government with the objective of social welfare and equality. So it is just in terms of ownership that communism and socialism are different. In socialism, the resources are owned by the government. In communism, all citizens equally own the resources. And through equal ownership, the government tries to bring about social equality. Okay? So if you want examples, most Western developed countries in the world, whether it is European countries or the US, are capitalist economies. The erstwhile USSR and China, to an extent, we can call it a communist state, and USSR was a communist country, and India pre-1991 was a socialist economy. Even today, a couple of states, like for example West Bengal in India, used to be a communist state. Kerala even today is a communist state. It is run by the Communist Party, okay, on the communism guidelines. So you have examples of communism, socialism and capitalism in the entire world. Rahil, before 1991, India was primarily a socialist economy. Post 1991, actually it is a mixed economy. So what you see today, there are some organizations, PSUs, which are owned by the government, as well as there are private corporations also. So that's why it's a mixed economy. Pre 1991, primarily, majorly, all corporations in major sectors were entirely owned by the government. So it was a socialist economy. Private players were very far and few, not much. So Srijesh, why do you say socialism is the need of the hour? Tell me why. See, the point of socialism, actually it's an experiment that India has tried for the good 50 years post independence. It didn't work in terms of growth. It didn't work in terms of making people wealthier. It didn't work in terms of new product development, best in class technology. None of the developments were happening. So whether it was on social front, whether it was literacy, education, sanitation, those were pathetic, and also on the income front. So socialism is a concept where the government owns resources, okay, and like I said, the objective is social welfare. So if you go back to pre-1991 days, what was the government actually doing? The government kept all the ownership of companies in its own hands, and it taxed the rich and gave subsidies to the poor. So you had the food distribution under the PDS scheme, you had fertilizer subsidies, you still have fertilizer subsidies, you had oil subsidies. So you gave the underprivileged subsidies and you taxed from the rich. So basically a Robin Hood economy. But the whole issue of socialism, Srijesh, is that government has no idea how to do business. Why socialism is not the need of the hour, or why socialism has not worked, is because it is the private entrepreneur who can best innovate, or can give best customer service, or can run a business efficiently. The government can govern, make policies, make rules, implement policies, create laws, and then have a judicial process. But the government does not really have the expertise or skills to do business, and therefore the business will always be substandard if it is run. Look at any PSU and you will get the idea what I'm talking about. So the reason why socialism has failed is because the businesses were not world class, were not even any class, forget world class. So that is why socialism is not such a great idea. It has never proved to be a great idea. Okay. Let me just take the rest of your questions and then we'll move forward. Srijesh, see, bureaucracy has a role to play, but where does bureaucracy come in? See, bureaucracy comes in when bureaucracy is given power. That's the whole point of socialism, that you control the resources and you're given the power how to allocate these resources. So if that power is in private hands, bureaucracy would not come in the first place. So Srijesh, it is a fallout of having the power to control the resources, right? So that is about the three forms of economy. You must again remember that these are economic forms. These have nothing to do with government. These are not related to democracy or to monarchy or autocracy or oligarchy. Those are governmental forms, whereas these three on the screen are economic systems. So you have capitalist economies, you have socialist economies, and then you have communist economies. If you mix up capitalism and socialism, that is, some corporations are owned by the private sector, some corporates continue to be owned by the government sector, you get the Indian economy. It is a mixed economy. Okay, so that is the structure today. Let's go ahead with the Indian economy now. Okay, some terms, I think most of these terms you all would have heard. Anything which you want to ask me on any of these four terms, I believe they are pretty self-explanatory. However, if you still have any questions, please ask. So you have the GDP, the net domestic product, the GNP, and the NNP. Actually, in terms of your interview processes and the GDs, the most important term for you to understand is the GDP, the first one. So if there's any problem with the GDP, please ask me. Anybody who doesn't understand what the GDP is. So guys, how much is India's GDP? Okay, so Raja, the difference between GDP and NDP is that NDP. Okay, so first let's go back to GDP. So first, can somebody define GDP for me? Can somebody define GDP for me? Define GDP, please. And then I'll come to NDP. What is net worth, Nitin? Can you just rephrase net worth? Banu, you're absolutely correct. So it is the value of all goods and services produced in a country in a period of 1 year. Okay, so generally we take the accounting year or the financial year to be from the 1st of April to the 31st of March next year. So during this period, all the value of all goods and services produced within India is India's GDP. Okay. So India's GDP currently is, as you guys were saying, it's about how much? Varun, $1.8 trillion. And somebody in the beginning is saying 1.2 trillion. So how much is it? Karthik, 1.2 or 1.8? So if you look at 2014, and when I say 2014, I mean 31st March 2014, it's about $1.85 trillion. Dollars is US dollars. So $1.85 trillion. If you calculate this in the terms of rupees, it works out to about 100 and, let me just write it down. So India's GDP currently works out to 110 lakh crore rupees, or approximately this much. I will not give you the exact number. It's approximately 110 lakh crores. Please remember, this is lakh crores. Okay, or in other words, 110 yeah. This is in rupees. Okay, so this is India's GDP. Now to answer the question raised by Raja, so GDP and NNP. Now NNP is net domestic, or NDP is net domestic product. Okay, it is a difference between GDP minus depreciation on government assets. So if you deduct the depreciation on government assets from the GDP value, you get your NDP. But for all intents and purposes, Raja, like I told you earlier, for all intents and purposes, for all interviews, for all selection processes, you must be very clear with the GDP. Okay. Okay. Now, depreciation on government assets. Okay, so let me come to all four then in that case. Depreciation on government assets. So government owns, like we said, government owns resources, buildings, land, it owns corporations. So all the depreciation on government owned assets is deducted from GDP to get NDP. Now GNP, gross national product, okay, is the value of GDP plus all foreign earnings of Indian nationals minus all Indian earnings of foreign nationals. I'll repeat. So the equation looks like this. So GNP, guys, please pay attention now. This is slightly GDP plus all foreign earnings of Indian nationals minus all Indian earnings of foreign nationals. So what do these two figures mean? This means, suppose there's an engineer working in TCS, and TCS sends him on a project to the US. The engineer earns, while he's in the US, he earns his salary or his incentives in dollars, foreign earnings of Indian nationals. So you add that part to the GDP figure, and if there is a similar, there's a guy, an American citizen working in Nestle in India, the earnings that he gets in Indian rupees in India while working here, that is deducted. So again, so GDP plus foreign earnings of Indian nationals minus Indian earnings of foreign nationals. Rahel, is the audio okay now? Is the audio clear? Yes, Raja. So GDP, you add foreign earnings of all Indian nationals and you deduct Indian earnings of foreigners who are earning money in India. So you add those things, you add the foreign earnings of Indian nationals, you deduct the Indian earnings of foreigners working in India, you get GNP. Is that clear now? Yes, so Srijesh, I assume that you're talking about the NDP. NDP, the depreciation calculations is worked out by this body. Everybody knows this? Yeah. So the Controller and Auditor General of India does these calculations. Right. Okay. So moving on, guys. So these four are the figures. The most important one, as I just told you, is the GDP. Can somebody tell me India's GDP growth rate? So as you have just seen, India's GDP is close to $1.85 trillion. What is India's GDP growth rate? Okay. So it is likely to be close to 5.5% in 2014-15. So the current financial year which is going on. It had dipped to sub 5% levels in 2013-14, right? So 2014 end, it was close to 5%, but it is likely to be around 5.5% in this financial year, and the projection is for 2015-16 that it is going to be between 6 to 7%, right? So when we say 6% or 5%, we are saying that 110 lakh crores is growing at 5% per year, right? Yes, Srijesh, there is. In fact, even though we are sidetracking the issue, the Bhutanese government has an index of happiness. So a gross happiness index they have. Yeah, Bhutan, absolutely. But in India also, and as well as across the world, you have something called the... Can somebody tell me what is that index called which Srijesh is referring to? It's not exactly related to happiness, it is more related to development. Absolutely, the Human Development Index. Absolutely. So the HDI is something that I'll talk about little later. Okay, we'll talk about the HDI also. It is measuring human development in terms of non-growth terms, so growth plus non-growth terms, and I'll talk about that in detail in some time. So we'll talk about happiness and we'll talk about satisfaction also, Srijesh. Okay, so the GDP we've just talked about. Okay guys, so what I'm going to tell you now is something which I think is important for you to know from the point of view of your interviews and selection processes. So I would advise you all to please note down. Okay? Please note down what we are going to discuss now. So I'm sure all of you know that every year the government of India in the month of February announces its annual budget. Okay? Budget, 28th of Feb, everybody knows that? Yeah? So what is this budget? Actually, the budget is nothing but a statement of incomes and expenses of the government of India. Okay? It's a statement of income and expenses. Now, let's try and make that statement here on the screen in front of you. So on this side we have the expenses and on this side we have the incomes. Fine. Now what I'm going to share with you is the data for financial year 2014. So which means 31st March 14. Year ended 31st March 14. Okay. So when the government presents its budget on 28th of Feb every year, they give two sets of figures. The first set of figures is the actual incomes and expenses for the previous financial year. So when they announced the budget on 28th of Feb 2014, they gave the actual incomes and expenses for the government for 2013-14 as well as the proposed, the planned incomes and expenses for 2014-15. Right? So I think that much is clear. So the government gives two sets of incomes and expenses. One is the actuals and one is the planned for the next year. Any questions so far? Okay. So what I'm going to share with you are figures for the government's budget for 31st March 2014. These are the actuals for the previous year. Okay. These are the actual income and expenses of the government of India for 2013-14, for the year ended 13-14. Okay. Rahil, what do you want me to repeat? We are talking about the budget of the government of India. So which part did you miss? Okay. Again, so Rahil, for your benefit, I am going to outline in front of you the budget of the government of India. On the board in front of you, you have the expenses on the left side and the incomes on the right side. We are talking about the financial year 2014, which means the year ended 31st March 2014. We'll talk about the actual incomes and the actual expenses of the government for the last year. So that is the year ended 31st March 14. Okay. So the figures that I'm about to give you are approximates. I will not give you the exact number. I will not be able to give you the exact number, but these are rounded off figures that I'm going to share with you. Okay. So can somebody tell me, let's start off with the income side here. So can somebody tell me what is the first head of income of the government? Where does the government earn money from? Please tell me. Absolutely. So taxes. So which includes all kinds of taxes. This includes individuals, so income tax. It includes tax levied on corporations, companies income tax. It includes indirect taxes like excise, like service tax, like sales tax, like VAT, like customs duty, etc., etc. So all types of taxes. So this figure for the previous year was 9 lakh crores. The government earned approximately 9 lakh crores from taxes. So direct plus indirect, the total was 9 lakh crores for the financial year 2013-14. The second, as Sri James has correctly pointed out, source of income is from government bodies. So when I say government bodies, primarily these are the PSUs. There are two sources of income here. One is income and the other is sale. So again, let me just explain this very clearly. So when I say government bodies, I mean the government, let us say, has ownership in MTNL and BSNL. The government can get income from these bodies. How? How can the government get income from these bodies? Anybody? How can the government make an income from BSNL or MTNL? Raja, not directly profits, no. Dividends, absolutely correct. So please remember that in a company, an owner always earns money through dividend. Profit is always profit of the company, right? So dividend is the correct term. Dividend income is the government's income because they are part owners or fully owners of that body, of that company. The second source of income from government bodies is when you sell your ownership in the government bodies. So you can call that a stake sale, that you can call that a share sale. whatever you call it. So it is sale of government bodies. Yes, Rahil, the dividend shareholder को मिलता है, and the government is nothing but a shareholder. Shareholder is who? Is an owner, right? So when I say owner, we can say it's the same thing as a shareholder, right? So the government is the owner. You can also call them a shareholder. So the dividend is the owner's income, right? So this figure, okay, I'll add one more thing here. That is sale of government assets. So this sale is sale of ownership in government companies. Yes, divestment, absolutely, it is the same thing as divestment. Here we are talking about government assets, assets like coal, assets like telecom spectrum. Okay, these are government or national assets. A government can sell these national assets and earn money from there. Okay, and combine this income was 2 lakh crore approximately for the year 2013-14. Any questions so far, guys? Any questions so far? Okay. Any other source of income, guys? Anything else you can think of? Where would a government earn money from? Yeah, so litigation income is the judiciary's income actually, Srijesh, but there are some cases where the government wins a litigation case and can earn money. The government can also earn money in terms of fee incomes like license fee, like some other small token fee, but generally that's a very small number, and I have included that in this 2 lakh crores. This number includes all the small miscellaneous heads. Any other major source of income for the government? Okay, let's come to this side. Let's come to expenses, guys. Saransh, bonds are not income, yeah. Foreign aid is also not income. These are borrowings. This is taking a loan. So when a government issues a bond, it is actually taking a loan. So we will talk about that little later separately. It is not income. Yeah, it's a liability. Absolutely. Okay, let's talk about the expenses side, guys. What's the expenses for the government? Any government makes some expenses. What are those? What kind of expenses does a government make? Absolutely. So, infrastructure spending, subsidy spending, yes. What else? What else? Infrastructure, subsidies, what else? Salaries to government employees, very big expense, yes. What else? Defense, another very big head, yes. Actually, if you ever were to read a budget statement, no, borrowings are again not an expense, guys. Yeah, payment on interest, yes, that is an expense, absolutely. Foreign aid is not an expense. How is foreign aid an expense, Srijesh? How is it an expense? Interest on foreign aid is an expense. Yeah, so I'll come to railways also. If you were to look at the government budget, you will find always there are two types of expenses mentioned. One is called the plan expenditure and the other is called the non-plan expenditure. Okay. Very briefly, I'll not talk in the terms of plan and Srijesh, I'll come to the foreign aids kind of concept. I'll come to that in a few minutes. But let me just come quickly to plan and non-plan, which is the main heads you'll see in any budget statement. Plan expenditure, non-plan expenditure. So very briefly, plan expenditure is all the expenses which have been laid out in a planned manner by the Planning Commission of India. Okay, there was a body, erstwhile body, it has now been abolished, called the Planning Commission. They decide along with various states and the ministries on the planned expenditure on the forthcoming year. Yeah, so it is now called the Niti Aayog. So that body used to decide that, okay, in the next year we'll spend this much on, let us say, a new healthcare plan. Okay, so that those expenditures which were decided as a planned funding to the state governments or a planned funding to various projects by ministries. These were decided by the ministries, the states, and the planning commission in consonance. Okay, these were all the planned expenditures, and the non-planned expenditures were the all other heads of expenditure. But for the purpose of understanding a government's expenditure, I'm going to make it simpler. I'm going to talk about expenditures in a much simpler fashion. Okay, so let's say infra. And when I say infra, I mean all government spendings, so which includes building roads, bridges, highways, schools, hospitals, right? All of those things is infra expenditure. It includes things like salaries to government employees, okay? Defense spending. All of these things put together for the government for 2013-14 was 10 lakh crores. The second big head was subsidy. And again, primarily there are three types of subsidies. The heaviest subsidies are three. The three Fs. What are these three Fs, guys? Three types of subsidies. Yes. Fuel is one. Food is second. And the third? Three big heads of subsidy, guys. Fertilizer, absolutely. Fertilizer, Shrijesh, not farming. So fertilizer subsidy, food subsidy, and fuel. The three big heads of subsidy. Almost all of this 2 lakh crores is accounted by these three heads. There are some few smaller subsidies, but they are very nominal. The three big heads are these. Okay. And the third big expenditure of the government is interest payment. Okay. Now, why this interest payment? Yeah, so railways. So railway is not a subsidy, guys. Railway is an expenditure which is planned. It is part of this infrastructure development. So if I want to develop new tracks, if I want to build new coaches, the railway gets some funding from the government. It is part of planned expenditure. So railway ministry gets that funding, and I have included that in this 10 lakh crores here, right? So this 10 lakh crores includes that. Okay. Okay, I'll come to that, Abhishek. Let me just share this picture with you, and then I'll come to your specific questions. Please hold that question. Please ask me that about 5 minutes later. Okay. Now, so the third head, like I said, over here is interest payments, and this amounts to about 4 lakh crores. So if you total this up, this comes to about 16, and this side is only 11. Obviously, I cannot spend more than I earn, and therefore the government will borrow. Now this is technically not an income, but we are writing it on this side to balance the two sides. Okay, otherwise this is not an income. Please don't quote it as an income of the government anywhere. It is only to balance the two sides that we are writing borrowing here. Okay, and of course the remaining amount, which is about 5 lakh crores, is what the government borrowed in financial year 2014 to meet its expenses. Akash, you're absolutely right. So the difference between these three and these two is called the fiscal deficit. The difference between incomes and expenses, if expenses are more than incomes, it is called a fiscal deficit. I'll come to where the borrowing happens. I'll just come to that, Varun, Arvind, I'll just come to that. So far this is clear. Now I'll talk about borrowings then. I'll talk about the places the government can borrow from. But so far this is clear. Yes, Akash, that was actually my next point. If you look at the borrowing, it is 5 lakh crores. Doesn't it strike you strange that on 5 lakh crore, I am paying an interest of 4 lakh crores? So which means an interest rate of 80%. That can't be true, right? You borrow 5 lakh crores and you're paying an interest of 4 lakh crores. How is that the place? What do you think, guys? How does this take place? Borrowing of 5 lakh crores, interest payment of 4 lakh crores. Is this correct? Absolutely, Archika. Good. So this interest payment is not on 5 lakh crores. This interest payment is on the total loan outstanding of the government of India. The total loan which the government of India has taken and which is outstanding so far as on 31st March 2014. I'll just try to write it here. So on 31st March 2014, total loan outstanding of the government of India is close to 55 lakh crores. Rahil, wait. I know that you are feeling pretty surprised. I'll give you a few more things and then you tell me your reaction. Okay, so give me just 2 more minutes. So this is the total picture of the government of India as on 31st March 2014. Okay, but this is not the end of the story. There are a few questions which I think you have and I'll answer them, but let me just complete the picture first and then I'll come to your questions. So again, borrowing. Now we borrow. Where does the government of India borrow from? Primarily three sources. One, the government could borrow from international sources. So which means I could go to the World Bank. I could, Rahil, is audio still a problem? Yeah, I could go to the Asian Development Bank. In fact, I could go to non-banking companies and non-banking institutions also. I could go to, for example, the government of China. And I could take a loan from another country's government also. So Indian government can take a loan from Chinese government. Indian government can take a loan from World Bank, IMF, US government, ADB, or now maybe they're talking about the BRICS Bank. Could be anything. So any international source could be a source for my loan. That's one. Second, I could take a loan from public. So which means the government could issue bonds. The government could take a loan from you and me in the form of bonds. The government already takes money from you and me in the form of instruments like the Kisan Vikas Patra or the PPF or post office saving instruments. All of these are loans which we give to the government. So you open a monthly income deposit at the post office, or you open a Kisan Vikas Patra, or you keep some money in the public provident funds. All of these are actually loans going to the government of India. Okay? And the government of India could also borrow money from Reserve Bank of India. When I say I mean the government could print bonds and give those bonds to RBI, and the RBI could give money to the government. So primarily a government borrows from three sources. It could borrow from international organizations, it could borrow from the public, it can borrow from its bank, which is the RBI. Right? So now guys, the picture is complete. What do you mean, Rahil, prerogative of RBI? What do you mean? No, Rahil, it's not forced, yeah. The RBI will always ask for some security. So the government will be printing bonds. So it's like saying you need a personal loan and you go to your bank. The bank will give you a personal loan. It will take a security. Similarly, if you want a car loan or a house loan, the bank will keep the house documents or the car documents with itself. So here also the government prints a certificate called a bond, gives it to the RBI. Against that certificate, the RBI gives money. Srijesh, we can't print unlimited money, or what will happen is the money in your hand will become worthless. Yeah, the money will become a piece of paper. So in short, I'm telling you very shortly, yeah. So in the detailed, it does lead to inflation. The value of money goes down. Examples like Zimbabwe are in front of you, absolutely. But in short, the money that you have, so you go to the printing press, print a lot of notes, the money will become just a piece of paper. It will lose its value. That's why you can't keep on printing. Okay, so is this nice picture in front of you clear? Anybody has any questions on the picture? Then I'll come to your questions other than this. Is this picture clear? Yes, guys, any questions on this picture in front of you? Please remember, okay, please remember all these figures are in lakh crore. These are all lakh crore rupees. This is all in Indian currency and all of these figures are in lakh crores. So 10 lakh crores, 2 lakh crores, 4 lakh crores, 9 lakh crores, 2 lakh crores and 5 lakh crores. Yeah, Shrijesh, I'll come to that. Okay, Nitin, first of all, for you, 3Fs are the three major heads of subsidy, which is fuel, food and fertilizer. These are the three biggest subsidy heads of the Indian government. Okay, let's go on. Okay, so when coming to Shrijesh, your question. So when I said foreign aid is not an expense, normally what happens is the government has some allocations. Like I said, there is a planned expenditure. So for example, when Uttarakhand disaster happened or when Kashmir happened this year, Kashmir floods happened, there is a Prime Minister's Relief Fund. Okay, so every year in the budget, the allocation to these funds are announced. Similarly, there is an international relief fund for which an allocation is done every year. Okay, yes, a contingency fund. And that is part of the planned expenditure. And that is, like I told you earlier, part of this already. It is already there in a fund, which is for these kind of contingencies. And all the unplanned expenditures, like I said, the major unplanned expenditures are salaries. This is a major unplanned expenditure and subsidies. So, but I haven't classified them here in terms of planned and unplanned because then it would have become a little confusing. I've given you the heads directly. These are the major heads of expenditure. But for your understanding, Srijesh, when we give aid, okay, there is already a fund which is there for that. So there's an international relief fund and we give money out of that fund. We don't have any separate expenditure dedicated to that. It is already part of a fund. So when an Uttarakhand happens or a Kashmir happened, we dig into that fund. We don't make any separate expenditure for that. Salary is not a planned expenditure. Yes. Shrijesh, so that is what. So any aid that we give is part of already a planned expenditure. It is already included in this figure and there is not a separate expenditure that we have to face for that. Saransh, what do you mean how, yeah? See, okay, so I think you were not there when we were talking about the planned expenditure. Planned expenditure is all the expenses which the Planning Commission in consonance with the ministries and the state governments decides that I'm going to spend on, let us say, a new healthcare plan. The health ministry wants to spend 100 crores. And so the Planning Commission says, okay, we're going to do that. We're going to do this kind of a scheme. And in the budget, they decide to set out 100 crores for this scheme. So various ministries, state governments and the Planning Commission sit together and decide certain expenditures which they want to make in the coming year. All that is part of the plan expenditure. All other expenses are the non-plan expenditure. Okay. Yes, guys, any other questions? Let me just check if there are any questions. Okay. So, Rahil, I think I'll come to your point then. See, you said, you made a comment that this is a very crazy picture. Please tell me, Rahil, what amazes you in this picture? Yeah? What is it that you are surprised about? Rahil, please tell me. Yes, Raja. So, okay. Okay, so 50% of GDP, right? So you're saying that the issue is the surprising part, the shocking part for you is that 50% of my GDP is my debt. Okay, good. That's a good point. Can I use a new whiteboard, guys? If you want, I'll come back to this whiteboard a little later. Archika, I think a video of every session is loaded onto YouTube. When that will happen, you'll have to contact the desk at Bullseye. But I think it will be loaded like every other session on YouTube. Okay. Okay, so let me just come back to this, guys. If you remember, I had told you earlier that India's GDP Yeah, was 110 lakh crores. And I just told you that the total outstanding debt on 31st March 14 was 55 lakh crores approximately, right? Now, this is 50%, and according to some of you, this is very high, but you'll be surprised. Out of all the countries in the world which are showing either reasonably good growth rates, so which is the developing countries, or the developed countries, which is the countries which have already developed, so Western European countries like Germany, France, etc., and the US, so and Japan, this is one of the lowest figures, one of the lowest. For example, I don't know if you know this, but the recession in Europe primarily or largely affected these 5 countries. These were the 5 countries affected the maximum by the recession in Europe. These are Portugal, Italy, Ireland, Greece, and Spain. Okay. Here, if you look at their income and expenses statements, they had debts 400, 500% of GDP. This is just 50, yeah. It's not a very big figure. Even the US has a debt of close to 200% of its GDP. So if its GDP is $14 trillion or $15 trillion, it has a debt of about $30 trillion. Okay. Debt ceiling, Varun, is a similar concept to what we are discussing. Debt ceiling is as per your constitutional body. So for example, the parliament. How much debt is a country allowed to take as a percentage of its GDP? That is called the debt ceiling. So this is a term which was popularized last year when the US fiscal cliff issue happened, and they were breaching the debt ceiling. So for example, they are allowed to take, I'm just taking an example, this is not the actual figure. So suppose the US is allowed to take 200% of its GDP as debt. Now if your GDP is 15 lakh crores, $15 trillion, if you reach $30 trillion, that means the government cannot take any more debt. So that's the concept of debt ceiling. Okay. So first of all, the first point which I want to make is that this number is not too huge. 50% of GDP is a very balanced number. It's a big number, no doubt, but bigger numbers have taken place and countries have even fallen. Actually, this is going to become a problem in the future. If it keeps on increasing like this, if it keeps on going up, this number will become a problem. Yes, Rahil, even USA is in 200% debt. Okay. So, Archika, it is decided by the constitution, and the constitution gives a power. For example, the constitution might say the parliament will decide, or the parliament can modify the debt ceiling. So, in the case of the US, it's the Congress. It's the US Congress which decides what the debt ceiling will be and whether it can be raised. Okay. So, the constitution decides, or the constitution says which body can alter or decide the debt ceiling. Okay. So where is the money coming from? So like I said, the government takes a debt, no? Yogesh, you can Google that, yeah. I mean, the smaller countries will have lower debt, obviously. There will be some countries which have no debt also. They'll be in financial surplus also. So it's not unusual. See, the point is very simple, guys. Okay. Banu, I'll come to that. Let me just go back to the previous one. Where does debt come from and how does all this take place? Why so much issue on this? See, the point is very simple. Debt is a difference between expenses and incomes. And if my incomes are more than my expenses, obviously I will not take any debt, right? So the issue with the European countries was that European countries, and I'm talking about the economies which tanked, they took too much of debt. Why did they take too much of debt? Because their spending was much more than their income. What spending was much more? If you look at Europe, for example, if you go to Europe, you will find the best of highways, the best of healthcare. In fact, hugely subsidized healthcare. You will find medical benefits, healthcare benefits. You will find free age benefits, pensions, and they give all this expenditure. So the governments of these countries are making these expenditures, whereas the tax rates are similar to India. So you have tax rates in the range of 20 to 30%, maximum of 40% in any of these countries, whereas the expenditures are, the kind of infrastructure spending they do, the kind of ports, dams, roads, highways, schools, hospitals that they build, the kind of subsidy that they give for healthcare, pensions, unemployment benefits, it is huge. So the issue is very simple. The countries have flunked or have tanked Western European. I'll come to all your questions, guys. Just give me a minute. First let me explain the concept of debt, how debt comes about. So the debt comes about because for Western European countries and the US, it's the first point here. It is the infrastructure and the salaries and the defense. All of these are very big. And the tax rates are similar to India. So they have not been able to match these two sides. They've had to raise a lot of debt. Okay. Now, so is debt bad? Not necessarily. Debt is actually not bad. Debt out of control is bad. Okay. See, for the point of development, it is always necessary for a government to spend more and maybe earn less. Okay. But at the same time, it cannot keep on increasing that debt volume. It has to be a certain limit. And that is why you have the concept of debt ceiling. Because that is what is considered by the parliament or the decision making body, that this is beyond which a country is going to be at risk. Okay. So that is the concept of how debt works. It is not bad. Okay. Okay, now let me come back to some of your questions. Debt ceiling, Archika, is decided. I just gave an example, Sanjeev, that USA is 200%. It is not necessarily 200%. I don't know the exact figure, but it is approximately 200%. Archika, debt ceiling is decided by the body. Yeah? For example, now in the case of US, the US Congress decides how much the American government can borrow. So that body, which is laid out by the Constitution, they decide how much debt the government of the country can take. Okay. Now, see, Sanjeev, 2-3 things. Yeah. One, where does the debt come from? Debt, like I said, comes from international borrowings, from public or from RBI, right? Or the government's bank. So if everybody is in debt, you are saying, where does the money come from? So one, there are international institutions. So institutions like the World Bank, like the IMF, like the Asian Development Bank, etc., etc. These institutions are specifically made for the purpose of international funding. That is one. Secondly, you have fiscal surplus countries. So countries in the Arab zone, for example, these are countries which are fiscal surplus. They are earning more than they are spending. And so therefore they are cash rich, they can give debt. So it is a overall world is balanced. It's not that there is an imbalance. Okay. Akash, QE is quantitative easing. I'll try to come to this today if we have the time. Otherwise, we'll have to cover this separately. Actually, it's a very detailed topic, QE. Yeah, Pratmesh, absolutely. Credit ratings, especially done by Moody's and Standard & Poor, also play a role in debt ceilings. Absolutely. Okay, so QE was in the... Okay, that. Okay, fine. Fine. Okay, guys. So, that is about the debt. Yeah, okay, Saransh. See, deregulation of petrol. See, if you look at what has been happening in the case of fuel in India, fuel was a subsidized commodity, and to a large extent even today it is. Even today, petrol and diesel have been deregularized, so which means the oil marketing companies can charge market price on these products, but LPG still is a subsidized commodity. Okay, so fuel has been a subsidized commodity to an extent, it still is. Okay. Now, because of free market players, like for example the oil marketing companies can charge the right price for petrol and diesel today, the government will definitely save some subsidy. So approximately 60 to 70,000 crores the government is likely to save. But this is only a notional figure so far, purely because the international price of fuel has come down drastically in the last 6 to 8 months. So crude oil, which was trading at $120 a barrel about a year back, is today trading at about $57, $58 a barrel. So crude oil has dropped 50% in its price. So thankfully, the government doesn't really have to, because of multiple producers of crude oil, because of shale gas, there are many reasons. Plus, of course, the Arab producers, the OPEC, have decided not to cut the output. So various reasons why the prices are falling. So therefore, the point of subsidy, how much the government will save, is moot, because the government, as it is, doesn't have to subsidize because the price itself has fallen. In fact, today, if you look at fuel condition in India, the government is making a big benefit from the fall in crude oil prices because they have increased the taxes on retail of petrol and diesel. They've increased the excise duties. Okay. Srijesh, the oil companies are not in positive. They're just about breaking even because the government has increased the taxes on the sale of petrol and diesel. So yeah, crude oil is falling and the government has got the benefit that they have got the leeway where, they don't have to subsidize the oil marketing companies. So they are saving the money, definitely. But at the same time, the prices for you and me have not really fallen because the government has increased the taxes. So what has actually happened is the international prices of oil have fallen by 40-50%, but in India, the prices have not fallen 40-50%. If you recall, 6 months back, you were paying about 80 rupees to a liter of petrol. Today, you are paying about 65. So, which means there's just about a 20% fall in the price of petrol. So, if there's an international price decrease of 50%, in India, the prices have fallen just by 20%. The rest has been going to fill in the coffers of the government through the additional taxes. Okay. So, the government is decreasing its fiscal deficit thanks to the international price of crude oil falling. Okay, what do you want to know about GST, Saransh? See, GST is the goods and services tax. It is an indirect tax proposal. Basically, indirect taxes are taxes like sales tax, service tax, VAT, excise, etc. GST is a envisioned tax where they will charge a single tax, a single point tax, instead of multiple point taxes. So earlier, what used to happen was that when a product is produced in a factory, it is charged excise when the product leaves the factory gates. When it leaves one state and goes to the next state, it is charged octroi or sales tax. Similarly, at the point of sales, there is a service tax in case it's a service related product, or a sales tax or a VAT. So there are multiple points of taxation today. Okay, and thanks to that, there are multiple points where leakages can happen. So I'm sure all of you have experienced where a lot of times when sellers don't give you a bill, they don't charge you a tax and they don't give you a bill, and therefore the government loses its tax revenue. So the GST is a tax proposed to be a single point tax where any product or service produced will be taxed only once. Okay, and therefore there will be only one point where the government will have to keep a check so that leakages don't happen. And also the proposal is to make this process online so that there can be no corruption in this, there can be no leakages. So GST is proposed to be a 1 point indirect tax, and of course if this is implemented and if this is brought about, the government's income, indirect tax income, is definitely likely to go up. Okay. Pratmesh, what do you want to know about CAD? Do you have any question on the current account deficit? Archika, leakages, for example, when you go to a store and you buy, let us say, a mobile, how many times, so for a mobile you will probably get a bill, but for a lot of products you don't get a bill. You don't ask for a bill. In fact, you ask the dealer to avoid the bill. Why? Because then you don't have to pay the tax on that, right? So similarly, a lot of products end up not paying tax because the seller and the buyer prefer not to do the transaction with an invoice. So in this way, the government loses its tax revenue, and the GST is a proposal which is envisioned to be a single point tax proposal. So indirect taxes will be charged only once instead of at multiple points in a product's life. and therefore the leakages will be lower. So therefore the government's income is likely to go up. Any other question, guys? Yeah, Archika, that's absolutely correct, and that is why the GST has been stuck up for the last 5 to 6 years, because the states have been saying that our income will go down. They are demanding a larger share of the GST tax income, and that share between the state and the center, and which products to be kept in GST and which products to be kept out of GST. This is the bone of contention because of which GST is getting delayed. Okay. Srijesh, actually with the proposal of GST, consumer prices may come down because the overall taxes that you have to pay, for example, if you go to McDonald's today and buy a burger, I don't know if you know this, but approximately 40 to 50% of the price of the burger is taxes. Okay. So for example, when the product, so for example a bun, so when the wheat is produced and then the wheat goes and a bun is made, and the bun leaves the bun manufacturer's factory, there's an excise duty taxed. Similarly, when the bun travels across state borders, there's an octroi taxed. Similarly, when you go to a McDonald's store, you pay a sales tax plus a service tax. So in all, put together, 40 to 50% of the price of any product today is taxes. And GST, the proposal is that the GST, average rate of GST will be between 20 to 25%. So which means the prices of products are likely to come down, but at the same time the government's income is also likely to go up because there will be less leakages. So yes, Saransh, with the GST, all products would come under the tax ambit. Of course, the rates product to product would be different. Yeah, that's what I'm saying, Archika, that the states were, for example, on liquor. A lot of states get a primary earning from liquor sales. So if liquor goes to GST, states are crying that my entire revenue, my entire tax income will be gone. So that is why states are not very comfortable with this concept. Last 6 years GST has not been implemented. That's the whole fight. Prices would change, Archika, because the overall taxes charged on a burger would not be 50%, now it will be 25%. Okay, that's what I'm saying. So Pratmesh, it will be product to product. Not all products will have the same rate, but on an average, some products will be charged 15% GST, some will be at 30%. On an average, the overall, if you take all the products put together, the average GST rate between 20 to 25%. Archika, taxes were not high. Yeah? See, the point is very simple. Yeah? There are today two taxing bodies. Okay, if you are aware, there is something called the center list and something called the state list, and then the concurrent list. Okay, now there are some products on which the center earns taxes, and the center keeps that revenue with itself. But at the same time, the state governments also earn revenue through taxes. They also have their own budgets, and therefore they also tax products in terms of octroi, in terms of state sales tax. So a product is taxed once by the center through excise, then again by the states through a state sales tax or through an octroi, through a border tax. So again, therefore there is a doubling of tax and you pay a much higher tax. So when you come to the counter to buy a McDonald's burger, a burger which McDonald's can sell for 50 or 60 rupees, it has to sell to you for 100 because of all the taxes which are bundled up. Okay. Right, absolutely, yeah. So when markets are reacting positively to GST is because when GST is implemented, if GST is implemented, the right side, this side, this will go up. And if this goes up, my fiscal deficit comes down, my government's balance sheet, my government's position is much better, and therefore more foreigners, more FIIs come and invest in my country. So it's a positive stretch towards better fiscal management. Yeah. So yes, absolutely. That's why the stock markets reacted positively. Saraj, total earnings to tax will go up, yeah, because see today, because of so many points of taxation, there are many loopholes. So you pay an excise duty officer, somebody comes to you, suppose you have a factory, you're manufacturing those McDonald's burger buns. Um, no, so you pay the excise duty officer 10,000 rupees, he looks the other way, you don't pay tax. Similarly, you go to a shop to buy the burger or to buy any product, and again you don't take a bill, you don't pay tax. There were so many leakages. So with the GST, the proposal is there will be a single point tax, and therefore there will be less leakages. So this 25% tax rate will give more revenue to the government than a 50% combined taxation earlier. And it will definitely, if you look at all the countries of the world where GST exists, their tax revenues are much higher as a percentage of their GDP. Harshika, it was not double taxation, yeah. It was taxation by two bodies, yeah. So center is charging you tax, so is the state charging you tax. So it is not double taxation. Yuvraj, absolutely. So states will have to be not dependent, but will have to get a refund. So in the sense, the government, central government will collect the taxes and then give a portion of that to the states. And that is exactly why the states are cribbing about this. Nobody is letting it get implemented. Srijesh, no, yeah, it was a very simple example. I hope that you guys would understand it better with the McDonald's burger. Point of tax collection will be the point of sale. Yes. Point of sale, absolutely. Yes, guys. So, Yuvraj, the exact permutation combinations of the GST is still being worked out. It has still not been implemented. The proposal is likely or hope to be implemented in 2015 or at worst by 2016. So the exact proposal what will happen, who will give funds, how will the reimbursement happen, that is still being thrashed out. We'll wait for that. But I hope you got the concept. Yes, guys, any other question on the government's fiscal position? Ravi, I think that situation will not come, because what will happen is, just like you have a PAN card today, so when you have a product getting made, there would be an automated system where a product, once manufactured, will enter a system, and a system technology will track it, and at the point of sale, automatically a tax will get added to that. So it will be all along one technology backbone that this GST system will work. Is likely to be on the selling price, yes. Okay. So some figures for you. This is about India. So like I said, approximately $1.85 trillion. And in terms of world, that's the 10th largest GDP in the world. This is 2014 figures, guys. In terms of PPP, I hope everybody understands PPP, purchasing power parity. Is this point clear, everybody? Purchasing power parity. Okay, so in terms of PPP, our GDP is $6.7 trillion, and in this regard, we are third largest in the world after China and the US. We are the third largest economy in the world. GDP per capita is quite low. I'm sure all of you know that. Nitin, PPP. No, PPP and nominal have nothing to do with each other. It's actually real and nominal that you're talking about. Yuvraj, please explain PPP. Yeah? Please put a quick definition of PPP in the chat box. Yuvraj, Srijesh, anybody? Yes, Yuvraj, please put their definition here. Yes, Prathamesh, China has just overtaken US in terms of PPP, but in terms of actual GDP, China is still lower than the US. Correct. So PPP or purchasing power parity is a measure of parity. Okay, when I say parity, it means equality. So purchasing power parity means purchasing power equality. In simple words, I as an Indian, how much is my purchasing power to, let's say, Mr. John sitting in the US? So if his purchasing power is the same as mine, it is called PPP. So purchasing power of A sitting in India and purchasing power of B sitting in the US, if they are equal, it is said that the two countries have purchasing power parity. Okay. Now, so Yuvraj is again using McDonald's. Yeah, so McDonald's is a popular example today. Okay. So again, let me take the same example and tell you actually why I guess McDonald's is being used so often is because the PPP is also called the Big Mac Index. It's the official name. You can check it out. I'm not joking. It is also called the Big Mac Index. The index was formulated. It was discovered. It was made using a McDonald's burger and the international price of a McDonald's burger. Okay. So that is why McDonald's is such a hot topic today. Anyways, so I'll give you an example for this. If, for example, a Big Mac burger, which is also called the Maharaja Mac in India, a Big Mac burger in the US costs $4. Okay, assume that the price of a Big Mac burger, let me just put on a slide. Let's say a Big Mac burger costs $4 in the US. Okay, and you also know that $1 is equal to, let us say, 60 rupees. Assume this is the exchange rate. Now I go to the US and I go to the McDonald's shop and I see that one burger is for $4 and I have $4 in my pocket. Okay, I don't buy the burger. I think it is too expensive. I come back to India keeping this $4 in my pocket. I go to the McDonald's shop in India with my $4, which means now in my pocket I have 240 rupees. But I go to my shop and I find out that one burger is only 100 rupees. So which means I can buy 2.4 burgers with my money. So which means I had $4 in the US, I had 240 rupees in India. It's the same amount of money. But in the US I could buy one burger and in India I can buy 2.4 burgers with the same amount of money. And it's the same burger. This is called purchasing power concept. This means that the guy sitting in India has a higher purchasing power than this guy. So India has a higher purchasing power than an American. Now is that clear? That was the simplest I could make it, guys. Is it clear now? So purchasing power parity says what $1 can buy in the US, you convert it into rupees, you should buy the same amount of that commodity in India. Then you have PPP. If this is the case, as you see on your screen, that I have $4, I can buy one burger in the US, with the same $4 I can buy 2.5 burgers in India. That means there is no purchasing power parity. I'll come to your question, Saransh, give me a minute. Is this clear? So which means purchasing power parity does not exist, and that is why if you go to this slide, at PPP, because Indian citizens have a higher purchasing power, our GDP increases. It increases to $6.7 trillion. Now, coming to your question, Saransh. PPP has nothing to do with rupee. Yeah? This is the first thing you must understand in economics, Saransh, and this is for everybody. The value of anything, okay, the value or the price of anything. So when we're talking about Indian rupee, the value of Indian rupee or the value of potatoes or the value of a fridge, TV, AC, the value of anything, the price of anything is decided by only two factors. One is demand and the other is supply. So the value of Indian rupees is decided only by the demand and supply of the rupee, nothing else. Okay, there is no role of PPP here. So GDP at PPP, Archika, means that this is, or this would have been, this is a notional figure. This is not an actual figure. Our actual figure is $1.8 trillion. But had the Indian purchasing power been equal to the US, okay, this figure means, GDP at PPP means, had the purchasing power of the Indian guy and the American guy been equal, our GDP would have been $6.76 trillion. So it's a notional figure. It is only used for inter-country comparison. The actual figure you have to work with is 1.85 or 1.87 trillion dollars. That's it. That's the actual figures. Now, if you can, Rahil, you should earn in India. If you should earn in the US and spend in India. Yeah, best of luck doing that. Which quantity can you write it in, Archika? So somebody is manufacturing a burger, somebody is manufacturing a TV, somebody is manufacturing a laptop, somebody is manufacturing a phone. What quantities will you do? Somebody is not manufacturing anything, somebody is doing a service. For example, me doing a service of teaching you right now. How can that be measured in terms of quantity? Yeah, so it has always is in value. Yes, guys, what else? Anything else? Okay, moving on. If you look at a comparison between India, US and China, yes, unemployment rate is a percentage of the total population. Percentage of the total population. So if you look at the comparison of India, US and China, USA's GDP, USA's PPP, GDP per capita is the highest, but the growth rate of India, 5.6%, is pretty good as compared to rest of the world. In fact, China has now fallen to 7.5 odd percent. This is for 2013-14. Now it has fallen to a lower level. Unemployment rate, India has 9.8%. The percentage of population below poverty line is close to 30%. And our imports are more than our exports, which means we also are running a current account deficit. Okay? Current account deficit is the excess of imports over exports. There are some other foreign remittances also, but largely this figure 312 billion and 450 billion is largely made up of exports and imports. Yes, Karthik, absolutely. So Varun, yes, 15% of Americans. So think the black population, think the Mexicans. 15% of the population is below poverty line. But of course, poverty line is different, no? So they have a different measure of a poverty line. They have the World Bank definition, okay, to quantify as a poverty line. It's not the Indian 32 rupees a day. So World Bank definition that they follow. So this, if you look at this exports and imports, you will find that even the US runs a current account deficit, but the Chinese economy is in a current account surplus. They export more than they import. Okay. So this is the comparison between India, US and China. Okay, one more thing. Yeah. So one more thing which I wanted to discuss with you. Sorry. Over here, yeah, on this slide again. So I had told you the fiscal picture of the government of India. Now, from the interview perspective, if an interviewer asks you, so this is not a very good looking picture, what can you do? Or for example, he frames the question, how should India, or what steps would you take to make India's fiscal position better? Okay, you must have a clear answer prepared. So if you look at this picture, it's not very difficult to give this answer. Okay, I can always look at this picture and say, to get a better fiscal picture, I can either reduce this side or increase this side, Correct? So either I increase my income from taxes or from government bodies or sale of government assets, or I reduce my spending on infrastructure, salaries, defense, subsidies, etc., interest payments. So either reduce expenses or increase incomes, right? No, it's easy to do also, Rahil. If there is a political will, it's not that difficult to do. Let me explain. So like I just told you the example of GST. So if you were to implement GST, the likely impact on GDP is going to be pretty substantial. In the sense, it is assumed that if GST is implemented, it is calculated that approximately 1 to 1.5% increase in GDP will happen. Okay? So if you just do a quick calculation of 1 lakh crores or 110 lakh crores, if you increase GDP by 1 odd percent, so which means 1 lakh crores, and if the tax rate is about 25%, okay, so which means you get another 25 to 30,000 crores as additional tax revenue just by implementing GST. Okay. Similarly, on the other side, if you were to reduce these subsidies, if these subsidies go down, so like you now see that fuel subsidies have started decreasing. Okay. So again, if you reduce subsidies, this equation can work out better. Similarly, if interest payments are reduced, again the fiscal picture can improve. Okay. How do you reduce interest payments? Well, you have to pay back your money. So interest payments can't be directly, reduced. But there is one way in which is called a sovereign rating. So every government is rated by the international rating agencies like Standard & Poor and Moody's. So the higher the rating they give to a country, the lower cost interest loans you get. So for example, a country rated A will get a loan from World Bank at 10% per annum. A country rated B will get a loan from World Bank at 12% per annum. So if I want to reduce my interest payments, I should try to get my rating better by the rating agencies. Okay. So Pratmesh, yes, that is why I talked about subsidies on this side. Okay, when you want to reduce, you always reduce this figure. No government in the world wants to touch this figure, and neither is it advisable. So infrastructure spending, salary spending, defense spending, schools, hospitals, etc. are all good heads of expenditure, and they must be done. In fact, they must be increased every year. So never should a country, or never does a country look to cut these. These are not cut, but subsidies is something which can definitely be cut. Archika, it is not a temporary measure, yeah. Once the price of fuel goes up, so internationally if crude oil becomes more expensive, you and I will pay more for petrol, yeah. Petrol will go up to 80, maybe even 100. That is going to happen. Yes. So you will always be able to advise a panel that if a government fiscal position is to be improved, it can always do so by either reducing expenditures. Primarily, you can reduce subsidies or interest payments, or you can even look at your revenue side where you can try to increase taxation. GST is one measure, and you can try and increase your income through sale of government assets and income from government bodies. So again, you can answer these questions, how to improve the fiscal health of any government. No, Archika, in case the price of crude oil goes up, it's up to you and me to bear it, yeah. That is what deregularization of the fuel prices has done. All increases and decreases will be borne by the consumer. Any questions, guys? See, subsidy for fuel, the logic was that Indian population was largely middle class and lower middle income. So even today, kerosene is subsidized and LPG is subsidized, which means that the lower income population should be able to get affordable fuel. So that is why the fuels which are meant for the poor have been still kept subsidized. Rahil, but see, the idea why they are not lowering taxes, they might, if the prices of crude oil go up, they might reduce the taxes, but somewhere they have to make up the tax figure also, no? So the reason why taxes have increased on fuel is to shore up this figure to increase this, right? So they have to look at both sides. Yuvraj, we are not decreasing subsidy on fertilizers. We are simply not paying it. Yeah, the government keeps it at a backlog. They have to pay 2 years back subsidy even now to the fertilizer companies. So it's back burner type of thing. Yeah, but they have not reduced subsidies on fertilizers. See, food is one area which is very sensitive. Even now, the proposed right to food, the NDA government has not touched because it is a very sensitive topic in India. Okay. Yes, guys, anything else? Any other questions? Okay. Yeah, Akash, very briefly, QE. QE is quantitative easing. Basically, QE is a concept which was started off with by the US government or the US Federal Reserve, and even Japan later on talked about the QE steps. Basically, quantitative easing is basically loosening of the monetary policy, which means the Federal Reserve in the US or the central bank in Japan will allow more money to flow into the system. Okay, that was the concept of QE. Okay, which basically meant they want the economy to rise, they want the business to stimulate, more money to be there in the economy so that growth takes place, and they are allowing more money to get pumped into the economy. This was the concept of QE. Okay, that is in very short, that I would like to explain it to you in more detail in maybe another session, but in a very short time, that's what they're trying to do. So now, Rahil, what they're trying to do is that they're trying to reverse the QE. Both in Japan and the US, they are looking at when to start reversal, when to start increasing interest rates. Yeah, tapering, absolutely. Tapering of the QE, absolutely. Which means gradual withdrawal of the stimulus. Okay, so what do you mean what our government wants now? Sarail, what's your question? Yeah, on how Indian government has no program of QE here. Oh, so government and RBI. So it's not a QE. Basically, the Indian government is asking RBI to reduce the interest rates, which is basically going to help corporates get cheaper funds. So basically, if I'm Reliance and I want to borrow money from a bank, I'll be able to get a cheaper loan if the interest rates proposed by RBI are lower. And that is what the government is saying, that if you want the economy to grow, we want the corporates to get cheaper funds, right? But the RBI so far is saying that, we want to fight inflation, and that is why we are not reducing interest rates. RBI has hinted that it might reduce interest rates sometime in early 2015, but let's see when that happens. See, the RBI's primary purpose is to fight inflation. Okay, it is the government's job to have economic growth or to promote economic growth. RBI's primary purpose is not economic growth, it is monetary policy. So which they have to deal with inflation first. Suggest bank FD rates have reduced because of the fact that they are preempting a reduction in lending rates. They are preempting that, from March or April onwards, their lending rates will go down. So that's why they are already reduced the FD rates. See, Indian government is not in a precarious situation like the US and Japan. No. See, in the US and Japan, again, I told you the Federal Reserve did that. Over there, if you look at Japan, the inflation rate is negative. It is actually a deflationary economy. The US, the the inflation rate is less than 1%, 0.5, 0.6%. They are actually targeting an inflation rate of 1%, 2%. They want a higher inflation. Okay, some inflation is good for economy. So that is what the situation there. Okay, so it's a very different situation. Yeah, Rahil, India, the inflation used to be at 10%, even 12% levels. In the last few months, it has fallen to sub 5% levels. But it is, my opinion is likely to go up to 7-8% by the middle of 2015. See, some inflation, Archika, is good for the economy because inflation also leads to growth. Yeah. See, if you remember when we talked in the beginning, we said that GDP is the value of all goods and services produced. Okay. So I'll give you a very simple example. So if GDP is the value of all goods and services produced, let's say the GDP of the country was 110 lakh crore rupees. Now next year, how do I grow this? I grow this either two ways: by producing more commodities, so more output, or by increasing the price of the output. There are only two ways to grow, no? So either you increase the number of goods and services produced, or you increase the price. So you have to do both. Some increase in price, generally less than 5%, is good for the economy. And again, generally some increase in output also has to be there. So if only price increase, that's also bad. And if prices go up too much, that's also bad. And if prices don't increase at all, that is also not good. So some price increase, some inflation is good for an economy. Okay, Pratmesh, we'll take your word for it, yeah, 3%. It's absolutely fine. So less than 5 is okay. Yes, Archika, absolutely, yeah. So you look at it this way, yeah. When you are working in a job, maybe 2 years down the line, wouldn't you want a salary increase? Wouldn't you want your salary to go up? Similarly, every producer, every businessman also wants his income to grow up through price increase, not just output increase. What happens if your boss says you are getting 20,000 a month, but you're working 8 hours? You work 9 hours and I'll give you 22,000. That's not the right way, right? So for 8 hours only you want 22 now, correct? So some price increase also has to be there. Archika finally understood when I talked about her job. Yeah. So guys, I think that is all the time we have for today. We haven't gone through all the concepts that were on the plate, but I hope that some of the concepts that we have discussed were clear. I hope you got the concept of the fiscal picture. I hope you understood what is GDP, what is GNP. I hope you got this whole equation. Yes, Akhil, what's your question? Karthik, for that you'll have to give a feedback to Bullseye. Yeah? I'm sure that they will do it once you give your feedback. Yes, Archika, all incomes of all goods and services produced will be included as long as they have accompanying invoices. If there is a cash given without an invoice, of course, then it will not be included in GDP. Yeah? That's what we also call black money. So anything which you cut an invoice for will be included. See, Indian Central Bank is not afraid of tapering, Akhil. The idea is very simple, yeah. When the QE happened, when more money flowed into the US economy, that money, so suppose let's say I am a US citizen and thanks to the QE program, I got a higher income, right? Now, what am I going to do with that money? I would like to use that money where I get maximum return, and if I invest in the US is giving me an interest rate of, the US bank is giving me an interest rate of 2 to 3%. I come to India, invest it, get it 10%. So a lot of American money, thanks to the American QI, was flowing into the Indian economy. Now if tapering happens, that money will move back out. That's the fear. Okay. Otherwise there's no fear, but that money is, or some part of that money may go back if QE is tapered. Nothing, yeah, it's not your money. See, the idea is very simple. India's fiscal health has a lot to do with, or the solutions to India's fiscal health has to do with India's expenses and India's incomes. What has come in from abroad is going to go out one day. When they make a good return, when they find a better investment destination, they will go out. You can't really control that money. Okay? So it's not in your hand. So, I mean, I don't think that's really a prerogative of any Indian entity to control that. They can only be cautious about it. That they can be aware that if this money goes out, then some tanking will happen, the stock markets will go down, but they can't do anything about it really. Yes guys, so with that I think we close the session. Please give your feedback. I hope you learned something guys, right? Thank you.